What is OTE in the ICT method, and how does it help define higher probability trade entries? OTE stands for Optimal Trade Entry. It refers to a specific Fibonacci retracement zone that aligns with discount for long trade entries and with premium for short trade entries. The idea behind OTE is to refine entry timing by focusing on areas where price is considered optimally priced within a range. This specific Fibonacci retracement zone runs from the 0.618 level to the 0.786 level. The midpoint of this zone, which is the 0.702 level, is also highlighted. In this illustration, you can see an example of an OTE for a long trade. Notice how this zone falls entirely within the discount zone. It is important to observe how price action reacts to all three levels of the OTE, with particular attention to the 0.702 retracement level. In the next illustration, you can see an OTE for a short trade. In this case, the zone falls within the premium zone. The same principle applies here. It's important to observe how price interacts with each of the three levels of the OTE, especially the midpoint retracement level, just as we do when analyzing an OTE for a long trade. Let us now look at a practical example of how the OTE works on a real price chart. In this example, you can see the 4-hour chart of EURUSD. An important swing high and swing low have already been identified. From this range, we can mark out the discount and premium zones. Recall that a range is simply the distance between a swing high and a swing low. We can then plot the OTE for this same range. Notice how the OTE falls into the premium zone in this example. If price returns to this area, the focus is on observing how price reacts to each of the three levels that make up the OTE zone. As price moves forward, we can see a reaction at the 0.618 level of the OTE. While this level can be used as an entry, it is important to remember that the higher price trades into the premium zone, the greater the potential risk-reward ratio. In the next chart, price initially reacts slightly to the downside, then returns back into the OTE zone. Price closes above the midpoint, but remains below the 0.786 level. On the very next candle, the market drops aggressively. Within one more candle, price reaches the swing low target. If a short trade was executed at the midpoint of the OTE with a stop loss placed above the swing high and a target set at the swing low, this trade would have delivered a 2.4 risk-reward ratio. In the final image of this sequence, price continues moving lower after the initial target is reached. This highlights an important point. While a 2.4 risk-reward ratio is solid, there was additional downside potential that could have been captured depending on trade management. Let us now look at a long trade example using the OTE. In this case, price has just formed a swing high. We first draw the discount and premium zones, and then plot the OTE using the range defined on the chart. In the next chart, price returns into the OTE within the discount zone and reacts at the lowest level of the zone. Price touches this level without closing below it, and shortly after, price begins to move higher in the direction of the previous swing high, which represents buy-side liquidity. So trader, please remember that the ComLucro channel is focused on giving traders clarity, confidence, and structure. And this Smart Money Concept series is designed to do exactly that. Each video breaks down one ICT concept in a clear and practical way, helping you understand how price behaves, where liquidity forms, and how market structure develops. If this explanation helped you see the market with more clarity, make sure to check the full Smart Money Concepts playlist linked on the card and in the description, where all these ideas are organized step by step into a complete learning path.